Happy Saturday morning, folks. How's everybody doing? I got a good video plan for you today. I'm going to review two filings from X Funds, the company that brought you blocks and GX. They filed for a couple of new funds that I think you guys might or might not be interested in. I'm interested in them, so we're going to talk about them. All right, here's what I'm really excited about. X Funds by Nicholas. They're coming out with something called NGHT Night, Nicholas Bitcoin and Treasuries After Dark ETF. And then they're coming out with BHDG, Nicholas Bitcoin Tell ETF. And that's what got me excited. That is what got me excited. I love this, anything that uses options to hedge, and that this BHDG, it was interesting. Night's interesting also. We're going to look at both of them. Okay, so Night is the Bitcoin and Treasuries After Dark ETF. Their objective is just long-term capital appreciation. What they're going to do, it says they seek long-term capital appreciation by systematically capturing Bitcoin's overnight return profile. The fund obtains exposure to Bitcoin through investments in exchange traded and cash settled Bitcoin futures contracts. I would imagine that they use Bitcoin futures, and they can trade those after hours, and then they can close the position during the day. I would guess that's what they're doing. But it's not an income. It doesn't look like an income opportunity. It says by utilizing Bitcoin futures, the fund trades these investments during overnight hours. Yeah, just like I said. When the fund says when utilizing Bitcoin underlying funds, the fund purchases a security at the U.S. market close and then sells the position around the U.S. market open, therefore capturing any market movement that occurred overnight. Well, lately, if this fund had been out lately, the movement overnight, by and large, has been bad. But anyway, in a bull market, the opposite should happen is the whole idea. A lot of the moves happen after hours in the stock market too. So anyway, that's interesting to me. I think that's interesting. We're going to keep an eye on that. I didn't see the date on this. I think this is kind of a new filing. But the one that's really interesting, of course, it's title. It's a title project, of course, just like blocks and GX. Or title sub-advises it. Okay, now this one, though, is really interesting. You know how folks are buying winter to hedge crypto downside, and it's worked out pretty well for a lot of folks. But still, it's not really inverse crypto, it's inverse strategy, which has still been pretty good lately. But if strategy ever gets their act together, that's not going to be such a good one. So this one right here is the Nicholas Bitcoin Tell ETF. And this one is also not income. It's just seek long-term capital appreciation. Now, it capital appreciation from a downturn in crypto. So I mean, hopefully this thing won't achieve its goal. Hopefully crypto will keep going up. But anyway, if crypto goes into crypto winter and drops, loses 80% of its value, a person that had an investment in this fund might do pretty well. So this is more the one that interests me. The other one, it looks like they're going to buy futures at the close and then sell futures at the open. And I mean, that could definitely be interesting. Okay, but here's the, so right here it says what they do. It says under normal market conditions, the fund's portfolio will consist of exchange listed options. It should say put options right there, because it says exchange listed put options on U.S. exchange traded products and ETFs to track the performance of Bitcoin. and then it says which are intended to provide downside protection. So he meant to put options there. Anyway, they're going to own put options in ETFs and ETPs, and those are intended to provide downside protection. But then the second line is how they're going to finance it. So, as we all know, if you saw my interview yesterday with Matthew Tuttle, he was talking about a no bleed tail risk fund. The thing about tail risk, anyone can buy puts, but puts are expensive, and you're on the wrong side of the buying and selling option equation, and you bleed. Anyway, so the way this fund's going to deal with it is they're going to sell call options or call spreads, while at the same time they're buying the puts. So when that says, according to them, the fund seeks performance as follows during the indicated market scenarios. Bitcoin declined sharply. The fund's long put options on Bitcoin are designed to rise in value as prices fall, while the short call spreads may lose some value in this environment. The appreciation in the long put option is expected to offset those losses, resulting in net gains for the fund. Yes, in a sharp decline, that's correct. We're going to look at this in OptionStrat in a second. All right. Bitcoin remains stable. The long put options held by the fund may expire worthless, resulting in a loss equal to the net premium paid for those positions. Bitcoin rises in value. The long put options will lose value. As you guys get this. Okay. And it says collateral, they're going to hold T-bills and stuff. Let me see if there's anything else. Principal investment risk. Well, the principal investment risk is that the price of Bitcoin keeps going up and this fund will do terrible. But that's the way it's designed. That is absolutely the way it's designed. So let's take a look and let me show you what I think they're doing. We're just going to start from a fresh page. This hedge one, I would think they use IBIT, but they can use others. This trade isn't even really in here. Okay, so here's what I think they're doing. I think they'll come in on IBIT and this right there is a sold call. They'll also buy a put, and it'll give them some kind of structure like this, where the fund, makes a little bit of money, doesn't lose money, but then this is it's like a reverse buffer fund, and this strategy will even do well. It'll do fine as long as IBIT doesn't go up by more than 5%. There's a little bit of a buffer to the upside. Then after 5%, you lose at the same rate you would if you were short stock, if you were short IBIT. So that's the bad news. The good news is a strategy like this, the call is sold for a little bit more than the put cost, meaning it doesn't have a bleed in the middle. It makes a little bit of money in the middle, but what it's really for is if Bitcoin drops, and because then you're just short Bitcoin. After the put option, you're short from 47.5 Bitcoin. From 47.5 down, it's as if you were just short 100 shares of IBIT. And so I believe that's what they're doing. Let's call it a short combo here, selling a call to buy a put. It's a risk reversal. It's also called a risk reversal, I believe. So you could even do it. You could do that on top of shares, and look what you have. That's the ULTY trade. To own shares and do that trade, sell a call and buy a put. ULTY is trying to do a different deal. This one is not going to have any shares. It's not going to have any shares. It'll be just like that. But look what happened if you wonder if you had 200 shares though. Look at this. If you doubled up on shares, That right there's the same profit and loss profile as the lightning spread. But anyway, all right, forget about the shares for now. But yeah, I think these guys will do. I think these guys will do this a strategy like this. They also mentioned a call spread, so they might. So they don't have unlimited risk of loss on the upside. They might do something like. They could do something like this also, where they sell a call spread and the call spread finances the put. But in any event, I think this is going to be interesting. It's just going to be a different way to hedge, without having to buy winter. All right, so it's Saturday morning. Let's see what the market's doing. Bitcoin is at 90,170. At least it's not down here in the 80s like it was yesterday. What time was that? In the morning. And then it hit 89, an hour ago or something also. It's anyway, we're barely hanging on to 90,000. If you look back and kind of step back, it looks like we're just balancing right here in this area around 90,000. So, anyway, all right, guys. Well, at least we have new options on the way, literally and figuratively. New options on the way on how to deal with the Bitcoin winter situation. I wonder if that, I'm just thought of this now. I bet you like a portfolio that's maybe I'm thinking, maybe not. I'm going to study it, but maybe a portfolio that's like 3/4 blocks and 1/4 this new hedge. I didn't see the symbol. Did you guys see the symbol on that? Oh yeah, Hedge, Bitcoin hedge. Okay. I wonder how 3/4 blocks and 1/4 Bitcoin hedge would do. And it all depends. It depends on on exactly how they do this and how much this thing bleeds or not. But I'm obviously excited about it because I came on here this other one will be a good one too. This other one, if we ever get in a bull market again on crypto, the other one can be a good one. Also, wonder about just using these as a pair, 75% night and 25% the tail one. It's just such an interesting time to be an investor. Whether you do options or you don't do options, you don't really have to because there's things out here like Hedge. That's going to be a pretty sophisticated strategy they're running. They're running, risk reversal. Anyway, it should be interesting. If I was them, I would do it and pay a little yield too. They don't ask me, but you just scoot this a little bit closer here like this, and it's only $12, but it doesn't tie up that much money either, and you get $12 a week. Have it where the contract where it makes a little bit where the call spread sells for a little bit, just a little bit more than on the put, and pay a 8 or 9% yield, 6 or 8% yield, something like that on this, and then have short protection, for catastrophe. The downside of this is the market makers aren't stupid. They aren't going to give you free money because Bitcoin's so volatile. Your put has to be so far out of the money that unless Bitcoin really drops, it's not a lot of protection when you do it because the protection's free. Not really free, it's paid for by the calls, but because the markets are priced efficiently and the market makers know what the real chance of either of these bets happening is, and they price the options where you're going to have to go way out on the put. Now, if you manage it early, it doesn't mean that you can't have a good 7 or 8% drop and make some money. This trade only ties up $200, so you make a 25% profit in a 5% drop. You make it in a 10% in an 8 or a 9% drop, you make about 200%. And it goes up from there, but it's more for for severe situation. But I think something like this could be interesting. But I don't think they're going to try to do it for a credit. There's all kinds of other stuff you could do, but yeah, it's just a great time to be an option enthusiast. Let's just say that. All right, guys. Well, we'll see how these funds do when they come out. I just saw the filing today, so it'll probably be months before they come out. But man, I bet some of these people wish they had BHedge, a month ago. I mean, it would have been a great time for BHedge because the IBIT did drop enough. If somebody was running a strategy like this, there were some times last month where a strategy like this would have been doing well, in my opinion. All right, guys. Well, thank you very much. I appreciate y'all for being here, and I will talk to you later.